Uh, One of the objective of this session was to get a view on how leadership thinks from a pure direct leadership perspective, how the markets are changing, and both ESAF and Shivalik are in a age where they can't talk anything legacy. They're building everything ground up. There's so much of transformation they are driving in the market, so it's good to understand what they are doing, what new age players are doing. So maybe, and that's our objective, right? Again, very brass tracks, very actual, nothing which is generic, right? So I think that's what we wanted to hear, and both the leaders have been sort of supporting us and supporting the ecosystem in a lot of way. All of them actually participate with a lot of fintech as well. I think we have seen a lot of engagement on your side as well as on your side, and they're also, ESAF is also going through a very large transformation as well. So a lot of things which you hear is really on the ground. So maybe, George, from your perspective as a new age bank which is focused purely on inclusion, what is the pathway for transformation? Because there's a lot of changes happening in the market. Sometimes you think that capital is not there, large guys are doing something different. So how should banks differentiate in a highly competitive market, right? So any quick thoughts from your side?
Yeah, first of all, thank you, Samir, and Little Fit team for inviting me here. And it's a privilege to be a part of you for the last 3 summits here.
Thank you.
That's really a privilege for us for ESAF Bank. As you know, the ESAF Bank is in the IT transformation, and we are targeted to go live by July. It's not just a core banking, it's the entire digital technology, infrastructures, everything is going to change, because so far we are in a bank in a box model. Now we're moving to a bank managed model or bank owned model.
Owned model.
Okay, and for ESAF, transformation not just becoming a digital bank, it's more on a digital inclusion bank at scale. Powered by modern core, then a strong data analysis basis, as well as responsible AI.
Yeah.
Okay, so under ESAF 2.0, we have a 3-layer transformation path we put forward. One is resetting our technology foundation by moving to a modern core stack, building a single data backbone, and adopting a API-first architecture. So we build the entire architecture based on the API based. And more importantly, comply to the Reserve Bank of India's and other regulators' directions. And secondly, our focus is more on a MARG framework. MARG is nothing else. It's a MSME, Agri, Retail, and Gold Loan. 2 years back, our secured asset is something like 24% less. So with the new technology things, we want to make it more on that. And so now we are on 63% on secured lending. We target to make it 70% in a couple of years. And third one is on becoming an AI-driven bank, basically looking on the credit underwriting, then collections, fraud detections, etc. So when it comes to differentiation between a fintech, I know fintech they have a speed, and large banks wins on the balance sheet. For ESAF, advantage is the trust in the last mile, especially. We have that BC models, and our 60% branches are in the rural and semi-urban locations. So our focus more on so that's the difference we have, the trust on the people and building our network in the rural and semi-urban locations. And purely we use digital is for reducing the cost and not improving the tax more on the straight-through process. So that's the way we are looking for on this one.
No, brilliant. I think good leadership and a lot of transmission which is on the ground, brass tacks, super stuff. Anshul, from your perspective, you're the first UCB to get converted into a small finance bank, and I think you're a role model for the market. So maybe you want to talk quickly about what has been your journey and how should cooperative banks look at this journey as well, and how should they start?
Hi, thanks for this opportunity. Yes, we're the first and as of now the only urban cooperative bank which transformed into a small finance bank. And that journey, I'll say, is primarily based on 5 pillars. If you want to convert, obviously the licensing regime is very different at a different level when you move from a UCB to a SFB. So our experience has been that one, very clearly, the technology stack which you have as a bank is something which is critical in this criteria of getting an approval. So how good are you with your mobile banking apps? while all those are basics, that is what matters when you convert from a UCB to an SFB. The second thing is about what kind of geographic or product concentration can you move out of? Because typically UCBs have been built in specific geographies, focused around certain communities. And if you want to build out as a small finance bank long term, then how do you move out of that geographic and product concentration? The third one, obviously, which I think is one of the most critical ones and never gets talked about, is whether the fit and proper will go through.
I agree.
For a conversion from a UCB to an SFB. That's a key one. The fourth aspect, I think, and we were lucky in the sense that, see, we're the youngest SFB. Some of us have done journeys with private sector banks before that, and those journeys have taught us what to do, and they've also taught us what not to do. And in that sense, we got a clean slate, no legacy systems, and that helps you build out an institution faster. That helps you get the technology sorted and connected in an easier way. And I think those were the core criterias which in our mind went in our favor when the conversion from a UCB to an SFB happened. And that's what we advise to a lot of people who reach out to you, reach out to us, who want to try and convert.
No, this is brilliant. This is brilliant. Moving to your perspective, and I'm sure on your role model, a lot of banks will also transition. If that happens, the market will have more opportunity to grow, right? Otherwise, it becomes very, very localized, and the competition also does not grow, right? I think the work you guys have done out there in down south, we've seen so much of work which is happening around Varanasi and all by Utkarsh. We've seen so much of work happening from Suryodaya in those regions, right? Everywhere they're actually fairly dominant in those areas, and they're helping on the ground, right? So it's a very tough job actually, honestly, working in the BC model and going down the whole structures, right? And very, very low transactions, right? You'll still be able to sustain. But George, from your perspective, the business models are continuously changing. I think every 2-3 years we say it is faster than earlier, and then you realize, oh, okay, even faster and faster and faster. So I think with business model changing, customers' experience are different. They're all digital by nature. Even the guys in the small towns are also very, very digital by nature. So how should, and the margins are under pressure for all, right? It's generic problems, right? So how should banks look at transformation, look at building their books next stage over next 3 to 5 years, and what's the roadmap you would want to talk to others to look around for that?
Yeah.
And what must change and what must not change? Otherwise, half the time we are changing everything.
Yeah. So I think we are already on the path of that. Building that technology foundation is the critical for us. So we are already into that. That because having a strong foundation is required for the meeting the demand, the business models, and also a strong database thing. So that's the one thing we are looking for. And also we should start shifting our risk model from a structural model into a hybrid AI models. So that help us to identify the alternative data and cash flows, especially for the agri, MSME, and microfinance segment. So that's more important than that. And secondly, on the distribution models, we should not stick to along the branch alone. We should explore the digital channels. We should go for BC, BF, DSA channels. All those things we should be able to do it, and also have assisted models. So that's the way we have to look at the models, and whichever channels we're using, that we should be able to use for building the bank, the trust factor which I mentioned already, and even though we will be heavily depending upon the data analysis, AIs and all those things. One thing we never change for ESAF is that our inclusion of DNA. That will not change. Whether we move for an AI-based model or we use a lot of data analysis, our DNA of inclusion will not change. That's one thing. And we also, second thing, we will not compromise on the customer trust. Okay, because that's the one which even the regulators started talking to all the banks now that don't lose the trust of the customers. And thirdly, it's a regulatory discipline. That's thing we'll not want to change from that. That always come before the rapid growth, because that's critical for RBI and the customers. Having a regulatory discipline. So in short, we will modernize our technology, no doubt, but will not dilute our core values.
No, this is good. This is good. And one thing I can tell you that humility is there, right? Whenever we go across the kind of people which your leadership has, the team has, I think everybody is so humble and so simple to work. So it's not going to change. I'm very, very sure on that. Moving to you, Anshul, branches are still very, very critical for the country, right? There is a journey for branches as well, right? We said that branches will become, first they were operations, then they became sales. Now we are thinking of what next stage. Maybe it will be a stage where branches will be back to servicing. So what is the future of sales, the branches? And how should we help the branches to become more effective? Because the business comes from there as well, and primary business comes from there.
See, when we converted to an SFB, we had branches which were around 2,500 square feet in size. And that was obviously the legacy model with which the bank had started. In our understanding, it's not that branches will become obsolete. What is happening already is that branches are reducing in size. The head count inside the branch is reducing. The focus of the branches is more with respect to query resolution and complaints management, and for the current account customers, cash management. Other than that, I believe a large part of the transaction is clearly moving online. However, all of us today don't even think once before opening our Swiggy and Zomato app and ordering, the same cannot be said about deposits in this country. Yes, while people have started opening FDs digitally and the works, but still your primary savings accounts or primary current accounts are not purely digital. And in some sense, even when we do digital products, the customers still, when they're taking money, it's fine. But when you're putting your own money, you would want to know, is there a branch in this state? That comfort, while you might never land up there, that comfort is still required. So that is one reason also why branches will continue. And the other aspect which all of us keep missing, see, we are a primarily secured lender. So 90% of our lending balance sheet is basis 5-6 different kind of collaterals. We've had too many black swan events as a country over the last 8 to 10 years. There was Demon, there was COVID, very recently there's been this microfinance crisis. So when those crises happen for a lending part of a regulated entity, it really works out better if you have some kind of ground presence. That ground presence does not need to be fixed cost. So today, for example, out of our 200 odd physical points which we have, only 65 of them are fixed cost structures. The others are variable cost structures, but they are exclusive to us. And that's how we believe we'll continue to build out. Obviously, our own branches have shrunk to around 500 square feet in size. But I still believe that it's not that branches are going to go out of fashion. They will be there, they'll serve a purpose, unless that category conversion happens in this country, that even for deposits, you don't care if the bank doesn't even have a single branch in the country. I think we're some time away from that, at least right now.
No, thank you, thank you. And one point I just want to tell you is that normally when, and I will give you our events also, when we do sessions, sometimes people are always on mobile. This is a session which I'm saying people are actually writing notes. So I think this is, I'll kudos to all the panelists who have been sort of going deep and sharing insights. I think I've seen it across all sessions in last 2 days. Coming back to a critical question on business outcomes, right? At a leadership level, when you invest so much in technology, what is the business outcome you're looking at? Finally, banks run on NIM, banks run on CAC, bank runs on cost income ratios and everything around that. And finally, maybe what percentage is STP and all of that. So what is the hard part of building it out, saying how do you get the maximum juice out of it? So how do you invest and reap benefits out of transformation?
Yeah. So if you define an ideal scorecard for ESAF Bank, I'm looking for a NIM of around 7.5 to 8.5%. We can even expecting support with the more secured and
7.5.
Yeah, that's what
amazing.
We're looking at, because that's, I know it's a tough code, but that's what we should look for. 7.5% we should turn. Personally, we are at 6.8, so I think we can do that.
You want to go up? Okay.
Yeah. but supported by a strong, secured, and diversified as mix. If you ask for cost to income, the second thing is the cost to income is somewhere around 65%. That we're looking on that, and cost of acquisition has to come down by 50%. Okay, the cost
50%
of has to come down.
Okay.
Okay. Suppose I'm spending 100 rupees, for per account for acquisition, has to come down at 40 to 50% to come down. Then otherwise, the more I involve investing in the new technology, it will be a waste of that. The return of investment is more on that, and I expect around 70%, 70 to 75% of my lending will be a straight-through process. I think that's the way we are working on the total ecosystem, and more important, we need to have a proper OKR or KPI to my business team. Because this much of investing, they have to come back for that. So that's another area we're looking on, and also in terms of priorities, and I look for on onboarding and the credit and collection should be the first thing, should deliver my higher impact, both for customers as well as this one. And ultimate success of business of the technology transformation is not that you move to a new technology. It is more about how much successfully is your business outcome. Whether your ROIs are come up, and I satisfy all my stakeholders, including the investors and the depositors. So that's more important. Because investing in more on technologies, the return should come in that manner. So that's why I know it's a higher targets. I think that's the way we have to work with the business team to get the result out of that huge investment.
No, this is good. And this is where the values will come. Most of these transformations don't cost that much. I think we need to just ensure that we harness the impact much more. Every project has to have KPIs, right? Otherwise, what will we do? So maybe to the same question, what's your thought process on how you can reap benefits out of these transformation initiatives?
Okay, so I'll split it into two parts, given where we are in our own journey. So we call Shivalik 1.0 is the UCB, Shivalik 2.0 are the last 4 years where we started crawling and now have started walking. And we believe the next 4 years is what starts in our own planning in the next 3 months, which we believe is Shivalik 3.0, where we'll start running at a certain pace. Now, on the control side, there is a basic amount of investment in technology which needs to happen, be it cyber security, be it risk, all those parameters you'll have to invest. It doesn't matter what size you are at. And in fact, that is one of the key items even for your regulatory approval if you want to convert from a UCB to an SFB. So that's something which is given. But after you move out of it, I am one of those guys, whenever somebody comes to me with a project, I ask ki, isse galle mein kitna paisa aayega? Because if you can't answer that question, right, you cannot we're not in the business of implementing new technologies. We are in the business of protecting the interest of small depositors. We are in the business of providing lending credit and other product categories to the customer on the ground. Our chosen segment is small businesses. So we will do everything which is required for them specifically. And it becomes difficult because a lot of us sitting in this room are salaried. We look at every product proposition.
Exactly.
Do I need this product? Or my board member will believe that he needs that product. But none of us are the real customers we are targeting. So the first question goes back to whether your customer segment needs that product. The second comes to the fact that what return can it give to you or to him, and hence you prioritize. Because obviously you can't do everything. So this is how we have ensured that a certain level of ROI gets maintained. This is how we've done investment over the last 4 years of building out product categories one by one. And the last item in this, and it's a crucial item, a lot of us bankers believe, and I keep saying this, that we can do everything. And we are best at doing everything. When in reality, there are companies out there who are better than us, who are subject matter experts, who keep upgrading their knowledge much faster than we do. So it's critical for us to continue to partner with those companies and get those products on board rather than trying to build out everything on our own. And I think these principles have held us in good stead over the last 4 years.
Okay, brilliant. And we have some time for questions as well because there are 5 minutes left. I can also ask questions, but if there is anybody out here wants to ask questions to the panelists here, you can raise your hands as well, right? Anybody has any questions? Okay, I am so used to asking questions then. So from George, from your perspective, everywhere we are talking about AI, right? And you are going through transformation right now, and the levers are getting applied. So where do you see the maximum value? Because a lot of founders are sitting here as well. They're also trying to think that how they can provide services to you. And to all providers, please do not jam him when he steps out, right? It becomes very difficult, right? Because speakers find it tough to just walk around, right? So my suggestion is that you can sit for some time and then leave. Otherwise, it will be very chaotic, right? Very, very chaotic. So everybody will rush after you. So from AI first perspective, how do you get measurable business value, and what are key use cases you think the bank are using? And of course, you're right now doing something. You can talk about that as well.
Yeah, from the ESAF Bank perspective, before I jump into the customer engagement, I prefer AI. AI can be applied in the area of on the risk outcome and productivity. Especially it can help me in the early warning signals or predict defaults or monitor the portfolio health of the product, as well as the productivity of my staff. So that could be the first area I'll look for it. Then we'll look for looking for customer engagement, because if I can have prevention of these things, that is easy for me to route. Because I done around almost a dozen of POC in the last couple of years, and I'm not able to get the required outcome. So that's one thing is really disturbing me. Okay, many of our partners are there, and I open to that for POCs. But the thing is that when we work on the end, that expected outcome is not come. So I have to drop. So then I again start again. So it's a painful process.
Yeah, it is
also
painful.
For me also.
POCs are like crazy.
Yeah, and some of the POCs are good for me for especially productivity, like the document validation, like KYC validations. That's and back office task and produce. Those things are helping me. But what I mentioned that I want to have a predictive analysis or predictive way of on risk management, risk modeling. So that may help me a lot. So I am willing to having a POC again with many people. But the thing is that you should move on from a pilot phase to more to a dependable model and a governance with have a ownership as well as accountability for that. Now we must maintain the human loop, no doubt about it. When I say human AI, you can spell HUMAN, put A after A, I put I before after A, so it's a human AI. So that should be the things we look forward, other than just look for AI alone. So in sense, we as a ISAF, AI is not an innovation; it is more on industrial discipline. That's what I'm looking forward. And how my partners can help them in building the risk as well as compliance aspect more than engaging the customers. And secondly, as I mentioned, the productivity of my how I can improve the productivity to serve the customer better. That's my area of focus on the AI.
Thank you. I think this is good. Anshul, from your perspective, you work with a lot of partners, right? And it helps us in scaling business and all of that. But in this environment where regulatory pressures are very high, DPTP is coming, and how do you sort of structure your partnership in such a way that we are fully compliant and creates value for both the entities, right? So maybe a more experiential rather than anything else, because you have lived it and you have scaled on this business model as well, and people love the bank for that, right? So quick views on that.
So our criteria when we are selecting partners, I think that is what is the most crucial part. It's not about, and to the point mentioned earlier by George, that in fact I tell people that if you do too many POCs which are going to fail, which means you're just trying to do a tick mark activity of doing POCs to show that you've tried 5 things and none of them have succeeded.
Or some of the team members are building their CVs around that, saying kuch to kar lete hain.
Fair enough. But the message from our side is that you have to be actively involved with the partner to actually get something off the ground. It can't be only the partner's job. That's what. The second thing is, I think the whole ecosystem has evolved a lot. 7-8 years back, the appreciation for regulation was much lower. today the understanding of the same is higher. In fact, a large number of ex-bankers run a large number of fintechs. So at least in those cases, you do not typically need to worry about the fact that do they appreciate regulation or not. So very clearly, from a partner selection perspective, you need, we always internally talk, you need two co-founders, one who understands regulation and the other who doesn't understand anything about regulation but understands technology inside out. And that's the best combination which we have found when we are selecting partners. Other than that, I think both sides have equal skin in the game. And we rarely now land up in those kind of scenarios where people talk about moonshot projects outside that regulatory box. I think that learning is there in the ecosystem. Probably 6-7 years back, it was not that much. So nothing much to worry. Core principles otherwise remain: how you control the data, is it secure enough, number of people who have access to it, and finally, the most critical question when you sign up with every partner, the regulated entity owns the customer. If you have a disconnect on that, we don't work.
Yeah, I think this is great. With this, we pause. I think perspectives are direct and real. And good part about most institutions, I'll be honest, is they are approachable, reachable. I'll be honest, one time, and I work out maybe now not, we have our own office, but we used to work on typical small offices, structures which we have in typical co-works, right? And he came across and met us there, and I've had a PSU DMD coming in and moving in, so it was very awkward for us to just host them there. So thank you for supporting, and thank you for being so nice to all of us, to the ecosystem, and supporting everyone. Thank you, thank you, sir. Thank you, sir.
Thank you so much. Thanks a lot, sir.
Thank you for coming. Thank you. Thank you, sir. I think they say that I always stand wrongly. Okay.
That's a token of appreciation from our side. Thank you so much for such insightful chat with us.